Well stated. Senator Wyden.
Thank you, Mr. Chairman, and I commend you, Mr. Chairman, for a good hearing and an important one, particularly timely because of the super committee. And that's what I want to ask you about, Dr. Elmendorf, because fortunately, in the super committee, one of the issues that is very much in play is the prospects of pro-growth tax reform. And you and I have talked about it before, but I want to walk you through a different aspect of it because it goes right to the heart of this debate about stimulus, and particularly stimulus right now. As you know, over the last 5 years, I've had the chance to work with two colleagues on the other side of the aisle who would certainly call themselves, conservatives, Senator Gregg, former Senator Gregg, and Senator Coates, and Senator Begich. Two Democrats, two Republicans have worked on this over the last 5 years. And I want to talk about the stimulative effect of what would happen if tax reform was enacted, certainly in 2013. In other words, there's discussion about the timing of 2012 and 2013, but let's talk about, say, 2013. Under the legislation that I put together, as a bipartisan effort, if you're a couple that makes $50,000 a year, $60,000 a year, $70,000 a year, you would get permanent tax relief of $3,000 to $4,000 a year, the typical person. And that comes about largely because what we do is we triple the standard deduction for those families. So the couple now gets about $10,000, it would triple to $30,000. So what that means for a couple making $60,000 or $70,000 a year, it in effect puts half their income off limits from taxation. My sense is that that would be, based on your analysis at page 26 of the report, fiscal policy options for assisting households would be a pretty good stimulus for the economy if that was to be enacted so it applied in 2013. You want to walk me through that because it certainly ties to other things that you've said in the past in terms of business decisions with respect to investment and hiring, depending on the demand for their products, and greater demand in production leads to more investment and hiring. That's sort of economics 101. And it seems to me there'd be significant stimulative effect in cutting income taxes permanently for those folks in those kinds of income brackets, $50,000, $60,000, and we also do it for people making $30,000, $35,000 as well, who get significantly more tax relief under that legislation. But why don't you give me your assessment of the stimulative effects here?
So as you know, Senator, we have not attempted to analyze the many economic effects that would arise from a comprehensive tax reform of the sort that you have developed. But you're right that reductions in taxes for households, especially if they were viewed as permanent reductions, would tend to spur spending by those households. The further down the income distribution or the less wealth, less assets held by households, the more likely that extra income is to be spent. That's why we expect that increases in aid to unemployed would have a particularly large bang for the buck. But for other households as well, additional income would tend to raise their spending. Of course, we'd have to keep track of all the aspects of your reform proposal to know how that would net out. But I think the channel you describe is certainly one that would take effect. Well,
I appreciate that, and I think it's a fair comment. Part of the reason that I asked it, and you're absolutely right, when you look at comprehensive tax reform, you have to look at all the pieces of the puzzle. This is something that hasn't gotten much discussion in the overall debate about tax reform. Part of it, I guess, would be my fault because I probably ought to be mentioning it more often every time this topic, comes up, but it has not been, particularly controversial. But I do hope, particularly in light of your answer and what you say in outlining the options there at page 26, that people see this as an opportunity for real stimulus that would not raise the deficit, number one, but would generate more revenue, which, as you know, is something that your companion organization, Joint Tax, found with the legislation that I authored with Senator Gregg and Senator Coates. Any sense of what families making $50,000, $60,000, $70,000 would do in terms of their purchases if their taxes were cut in the vicinity of what I'm talking about, 50%? I mean, my sense is they would go out and make those kinds of consumer purchases, consumer durables that had a big economic multiplier. So let's have you analyze this in terms of the area you have looked at, which is largely the lower income brackets, a bit lower than I'm talking about, say $30,000, $35,000. But doesn't the evidence show that they go out and make purchases in areas like consumer durables that have pretty good multiplier?
Well, I think, Senator, that their interest in doing large-scale purchases depends importantly on their expectations going forward. So your statement that under your proposal these would be permanent features would certainly amplify the effects on their large-scale purchases of the sort that you're describing. And in general, as we've said a number of times, and many members of the committee have said, the uncertainty about what will happen to U.S. fiscal policy, what taxes people will face, what government programs or benefits might be cut in deficit reduction efforts, is a component of the uncertainty that's facing households and firms and deterring their spending. In our assessment, most people's assessment, the larger source of uncertainty people face is their future incomes before tax, the demand for firms' products, and so on. But the uncertainty about government policies is important, and the extent to which that can be resolved through any actions of the Congress or reduced uncertainty through actions of the Congress, that would be, we think, a good thing for the economy.
I'm glad you mentioned that with respect to the judgment of individuals, because I think individuals, much like businesses, are in the general mode of being cautious. They don't know what's going to happen, and they look at yet another proposal that is temporary in nature. I've had people come up to me and say, Ron, these temporary ideas, what's going to happen is when you all are done with your temporary ideas, everybody will just go back to fighting. And then they see the economy not building a sustained recovery. So I think the points that you have made today need to ring loudly in this debate about tax reform, and I appreciate your going through this with me, because I think the chance as part of permanent tax reform to, in effect, put off limits from taxation 50% of what households make, whether they're making $30,000, $40,000, $50,000, $60,000, $70,000, is a chance to really change behavior in the marketplace, because people will see it is not just another temporary proposition. So I think this is very helpful, and I'm going to try and get your message to the super committee, and with your answers, try to highlight this as we go into these last days, debating the opportunity for the super committee to pass pro-growth tax reform that could kick in with exactly the kind of timetable that you identify in your important report. Thank you, Mr. Chairman.
I want to thank the senator from Oregon. I want to just say publicly that the senator from Oregon is one of the most constructive members on this committee and in the body. And I appreciate the really extraordinary amount of work that the senator has put out on the major controversies and challenges facing the country, whether it's tax policy, whether it's health care policy, whether it's trade policy. It really is quite extraordinary that the senator, who does not have the staff of a chairman of a committee, has put out very significant plans in a bipartisan way that are really well thought through. And I just want to say that the senator deserves all of our commendation for producing really solid work and big amounts of it.